Imagine a company that's, well, so fundamental to our digital world that it's quarterly financial calls. They're almost like decoding the future of technology itself.
Hmm.
We're talking about that invisible force, behind your smartphone, your AI, all the high-performance computing powering our modern lives.
Right.
Today, we're taking a deep dive into the latest from TSMC, the undisputed titan of chip manufacturing.
That's right. And our mission really is to pull out the most important nuggets from their recent Q2 2025 earnings call and their June financial overview.
Give you that shortcut to being well-informed.
Exactly. Not just the numbers, but what they actually reveal,
Yeah.
about the cutting edge of tech, the global economic currents, and honestly, some surprising facts that keep it all moving.
Yeah, get ready to unpack these microscopic battles over nanometers, the surprising influence of currency swings on a giant like this, and that global race to build the future, one chip at a time.
Mm-hmm.
So with that intriguing overview, let's dive into the core numbers and sort of unpack what they truly mean.
Okay. So if we look at TSMC's second quarter of 2025, well, the financials were incredibly solid.
Mhm.
Their revenue hit US $30.1 billion. That's up a robust 17.8% just from the previous quarter,
Wow.
and actually exceeding their own guidance.
Okay, and profitability.
That's where it gets really interesting. A gross margin of 58.6% and an operating margin of 49.6%.
Pretty healthy.
Very healthy. And even more impressive, their earnings per share saw a 60.7% year-over-year increase. Huge jump.
Those are definitely robust numbers. But what do they tell us about the kind of the broader market beyond just TSMC? Are there any subtle weaknesses hiding there, or is this purely massive demand?
Well, what's remarkable is where these strong numbers come from. It's very specific, advanced technologies.
Wow.
They define these as 7 nanometer and below. And they accounted for a massive 74% of their wafer revenue.
74%.
Yeah, I mean, that's not just a number. It's a profound statement, right?
Yeah.
74% of their revenue comes from the absolute cutting edge.
Solidifying their lead.
Absolutely. Undisputed leadership in the most advanced, most profitable segments. It's a clear sign of where the future of tech is being forged.
So within that 74%, what's the breakdown?
Right, so 3 nanometer, that contributed 24%. 5 nanometer was the biggest chunk at 36%. And 7 nanometer accounted for 14%.
And the platforms driving this, HPC, smartphones?
Yeah, high-performance computing, or HPC, was the biggest driver. 60% of revenue.
60, wow.
And it increased 14% quarter over quarter. Smartphones followed at 27% of revenue.
Okay. And we also got that peak at the monthly numbers for June 2025. Gives us a bit more granularity.
Right. The monthly update, June revenue was NT $263.71 billion.
Now, that was down a bit from May, wasn't it?
It was, yeah, 17.7% decrease from May. But the real story, like you said, is the year-over-year comparison. A significant 26.9% increase from June 2024.
So the trend is still strongly up.
Definitely. And if you look at the cumulative picture,
No.
January through June 2025, the total revenue was NT $1.77 trillion. That's up a staggering 40% compared to the same period in 2024.
40%. Just massive growth.
Huge. But, even with those impressive figures, TSMC faces some pretty significant challenges, things that can quietly erode even these strong gains.
Like what?
Well, particularly the unseen hand of foreign exchange rates.
Currency.
Yeah.
Always tricky.
Exactly. And here's one of those surprising facts we mentioned. Nearly all of TSMC's multi-billion-dollar revenue is in US dollars.
Okay.
But about 75% of their cost of goods sold, that's in new Taiwan dollars.
Oh, I see the mismatch.
Right. It creates this high sensitivity. Every 1% appreciation of the NT dollar against the US dollar, it reduces their reported NT revenue by 1%. And it hits their gross margin by about 40 basis points.
40 basis points. So 0.4% off the margin for every 1% currency move.
Precisely.
That's a remarkably direct impact. Is there anything TSMC can really do to strategically hedge against that kind of volatility? Or is it just, a cost of doing business globally they have to absorb? Sounds like a huge variable.
Well, it's largely a factor they have to manage, yeah. I mean, look at Q2. The NT dollar appreciated 4.4% sequentially against the US dollar.
Okay.
That led to a substantial 180 basis point headwind on their gross margin.
Wow. Almost 2%.
Yeah. And they're expecting a further 6.6% appreciation in Q3. That'll mean an even bigger hit, around a 260 basis point reduction.
Oof.
So while they do have hedging strategies, it's a constant battle against these currency movements. It significantly impacts their bottom line.
Okay, so currency is one headwind. What about their global expansion? Building these new fabs, Arizona, Kumamoto. What's the impact of that huge expansion on margins? Does building outside Taiwan just naturally cost more?
It does, yeah. This global expansion, particularly Arizona and Kumamoto, it's leading to what they call margin dilution.
Right.
It started to kick in. They're forecasting it to be between, say, 2 to 3% annually in the early stages, starting right now, basically 2025.
And longer term?
It could widen maybe 3 to 4% in the later stages over the next 5 years. It's simply the cost of building these advanced manufacturing capabilities outside Taiwan, inherently higher operational expenses.
So you've got these big headwinds, right? Currency fluctuations eating into profits, new fabs diluting margins. What makes them so confident they can still hit that long-term gross margin target? They mentioned 53% and higher. Are they just banking heavily on the AI boom to offset all this? Or are there other levers they can pull?
That's a really perceptive question. Despite these challenges, yeah, TSMC is confident. They emphasize focusing on the things they can control, like technology development, pricing, capacity utilization, cost reduction, and their technology mix. Foreign exchange, initial fab costs.
Yeah.
Less controllable short term.
Right.
But by continuously optimizing these other 5 factors, they believe they can manage through it. And yes, you're right. The AI boom is definitely a major part of that whole equation.
Okay, let's talk about that future then, because it really seems like the demand for AI, for high-performance computing, it's just exploding. This AI tsunami, as some call it. Sounds incredibly powerful. But is there any risk of over-optimism? Or is the demand really that insatiable?
The demand is certainly building serious momentum. What's crucial is how the escalating data processing, the token volume for AI models, how that translates directly into needing more and more computation.
Makes sense.
And that, in turn, drives more leading-edge silicon demand, including from what they call sovereign AI.
Sovereign AI. Countries building their own.
Exactly. Countries investing in their own AI capabilities. So this robust demand actually led TSMC to revise their full-year 2025 revenue forecast upwards.
Oh, really? By how much?
To an increase of around 30% in U.S. dollar terms.
30% for the full year. That's a significant jump.
It is. It reflects deep customer commitments. They're seeing it lock in.
Okay, so more computation means more chips, more advanced chips, which takes us right to the cutting edge, doesn't it? The nanometer race, pushing the limits of physics. Tell us about N2, A16, A14. When I think about innovation moving this fast, does it ever feel like they might hit a wall? Or is human ingenuity just relentless?
It certainly feels relentless sometimes. Their N2 or 2-nanometer technology, it's positioned to lead the industry for energy-efficient computing.
Okay.
They actually expect the number of new design tapeouts, the initial blueprints for new chips.
Right.
For N2 in its first 2 years to be higher than both 3-nanometer and 5-millimeter SAW.
So strong early adoption. What are the benefits?
It promises 10 to 15% speed improvement, or alternatively 20 to 30% power improvement, and over 15% chip density increase compared to their N3E node.
And when does that hit volume production?
It's on track for 2025, so next year.
Okay. And then there's A16, which sounds like another big leap. What's special about that one, particularly for these AI chips we keep talking about?
Right, A16. It features something they call a superpower rail.
Superpower rail. Sounds powerful.
It is. It offers an 8 to 10% speed improvement or 15 to 20% power improvement, plus another 7 to 10% chip density over N2P.
But what does it do?
What's crucial is its suitability for HPC products, things with really complex signal routes and dense power delivery networks. It directly tackles that critical power supply issue for AI data centers.
Getting enough power to the chip efficiently.
Exactly. Imagine trying to power a city with a garden hose, right? Superpower rail is like upgrading to a fire hose for these power-hungry AI processors. It's about better power delivery on the chip itself.
Got it. And volume production for A16.
That's slated for the second half of 2026.
And beyond that, we're already hearing about A14. I mean, that feels incredibly fast.
It is fast. Yes, A14 is described as a 4-node stride from N2, which is quite something.
4 nodes, wow. Benefits.
Promises another 10-15% speed improvement or 20-30% power improvement and about 20% chip density gain compared to N2.
And the timeline.
Development is actually ahead of schedule, they say. Volume production planned for 2028. It really shows that relentless pace needed to keep up.
So with all this demand, especially for these advanced nodes, N3, N5, N2 coming online, is their capacity keeping up? We keep hearing about how tight things are across the industry.
You're right to ask. Capacity for N3 and N5 is, in their words, very tight.
Very tight.
Yeah, and many AI products are actually transitioning now from 4 millimeter to 3 millimeter, which adds pressure.
So how do they manage that?
Well, TSMC has this strategic advantage. About 85 to 90% common tools across N7, N5, N3, and N2 nodes.
Ah, so they can repurpose equipment.
Exactly. It allows them incredible flexibility to adjust and convert capacity to try and narrow the gap, as they put it, between demand and supply. They're even using some N7 capacity to support N5 demand and converting N5 lines to N3.
That's clever. Okay, and what about advanced packaging, like CoOS? That's critical for stringing together these high-performance AI chips, right? It's not just the silicon anymore.
Absolutely critical. And demand for advanced packaging, CoOS in particular, is very strong. They're working hard building new back-end facilities to meet this.
Is there one standard approach emerging?
Not really. Their philosophy seems to be developing a variety of different solutions. They recognize customers have different needs, different architectural approaches, so they aim for flexibility there too.
Okay, let's zoom out a bit then to the bigger picture. TSMC's global manufacturing blueprint. Why are they building these fabs across different continents? Is it purely about meeting demand, or are there, deeper geopolitical or economic reasons driving this?
It's definitely a complex mix of factors. Their decisions on global expansion, they're based on several things. Customer needs, first and foremost. Geographic flexibility, providing options. Value, meaning cost effectiveness where possible. And importantly, necessary government support.
Incentives, subsidies.
Right, all while keeping the overarching goal of maximizing shareholder value. And look, in today's world, that often means diversifying your manufacturing footprint beyond just Taiwan.
Makes sense. Speaking of expansion, the U.S. plans, particularly in Arizona, they sound truly ambitious. What's the latest there? How fast is it really moving?
It is a monumental undertaking, no doubt. We're talking a U.S. $165 billion investment plan for the U.S. alone.
$165 billion.
Yeah.
Wow.
Yeah. That includes 6 advanced wafer fabs, 2 advanced packaging fabs, and a major R&D center. And what's particularly impressive, their first fab in Arizona, the N4 one, it actually began high-volume production back in Q4 2024.
What are you producing? How's the quality?
Yields are comparable to their fabs in Taiwan, they say, which is a huge achievement.
Definitely. What about the next fabs?
The second fab for 3 nanometer is already completed, construction is done, and its volume production schedule is being speeded up by several quarters.
Sped up. Why?
Strong customer interest, especially from the AI leaders. They want those 3 nanometer chips stateside, it seems.
And the third fab?
Construction has begun on that one, too. That's for 2 nanometers and A16. Also accelerating because of AI demand.
So when this is all done, how much capacity will actually be in Arizona?
They estimate approximately 30% of TSMC's 2 nanometers and more advanced capacity will eventually be located in Arizona.
30%. That's a
Yeah.
significant shift.
It is.
And they're not just in the U.S., right? What about Japan and Europe? Are those plans getting squeezed by the U.S. acceleration, or are they totally separate tracks?
They seem to be largely separate tracks, mainly because they focus on different technologies.
Okay.
So in Japan, their first specialty tech fab in Kumamoto that started production late 2024, reportedly with very good yield. And plans for a second fab there are already in motion.
Specialty tech, not leading edge.
Right. Things like CMOS image sensors, maybe some automotive components. And similarly in Europe, progress on their specialty tech fab in Dresden, Germany, primarily for the automotive industry, is apparently smooth.
So the U.S. speed-up doesn't delay Germany or Japan.
Correct, because the U.S. focus is leading-edge logic, while Japan and Germany are more about the specialty technologies. Different markets, different equipment needs.
Okay. So even with all this massive global expansion, Taiwan still remains absolutely central to their strategy, correct? It's still the core hub.
Absolutely correct. They stressed continued significant investment in Taiwan, plans for 11 wafer manufacturing fabs there, plus 4 advanced packaging facilities, including multiple phases of 2 millimeter fabs. Taiwan is absolutely still the core of their most advanced manufacturing and R&D.
Right. This brings us then to the very edge of tomorrow. We've talked a lot about today's AI boom. But what about beyond that? What are the next big drivers they're looking at? Maybe even, a decade out.
Yeah, they're definitely looking ahead. One area is on-device AI or edge AI.
Running AI directly on your phone or device.
Exactly. Designs are underway now. That takes maybe 1-2 years to complete. but they expect an explosion in on-device AI within the next 6 months to a year.
An explosion. What does that look like chip-wise?
Characterized by increasing chip die sizes, maybe a 5 to 10% increase per chip as more AI processing moves directly onto our devices. Bigger brains in our gadgets.
Interesting. And looking even further out, one potential driver TSMC mentioned sounds almost like science fiction. Humanoid robots. Are they really seeing that as a viable future market for chips?
They acknowledge it, yeah. As nascent, obviously, but potentially a massive new market category for the future.
How big?
Well, one executive described it as potentially 10 times the complexity of an EV car.
10 times. Wow.
Think about it. It's incredibly intricate. Needs all sorts of sensor tech, image, pressure, temperature, plus really complex computing for movement, decision-making.
Right. A lot going on.
So while it's very early days, it could become a significant future driver. And interestingly, maybe even for their mature nodes too, given the diverse needs across different parts of a robot, not everything needs the absolute leading edge.
Fascinating. So we've really peeled back the layers here on TSMC's robust performance, navigated through those tricky challenges of currency and global manufacturing costs, and peered into the future of chip tech, which is just being relentlessly driven by AI. Hopefully you listening now have a much more powerful understanding of these unseen forces shaping the whole semiconductor industry. Insights that, can help you understand not just the tech news, but maybe even your own investments or just how the devices you use every day are evolving.
Yeah, this deep dive, it isn't just about scanning financial reports. It's really about recognizing these foundational shifts happening right now, the ones that will power the next generation of everything, from our personal devices right up to those massive AI data centers.
So a final thought to leave you with. As companies like TSMC spread their manufacturing footprints across continents, pushing the absolute limits of physics for smaller, faster, more efficient chips, what does this globalized, yet also localized, future of tech actually mean for national economies, for that intricate web of global supply chains? And maybe even more profoundly, how might this insatiable demand for AI powering data centers, maybe even humanoid robots someday, how might that fundamentally reshape our world's energy demands, our infrastructure, in ways we're maybe only just beginning to comprehend? Something to think about.